here. I just want to give a big shout out to all the people still holding bags of Luna right now. Epic disaster in the markets in the last week. I haven't been here for a while. I just want to touch base and let people know where we are. I had some questions from people, some family. Specifically, this video might help Nanny out. Hopefully she's listening along. And I'm going to try and just explain. We're looking at the Luna chart right there, but I'm going to explain when we get to the full screen chart about what is happening in Bitcoin and where we are currently. It's going to show people the epic disaster that just happened in Luna. If you can't tell from the numbers on my screen, I'll just read it off this top part up here. This is about $120 American. And this is fractions of a penny down here, okay? This is 0.0019. Okay, so this is a disaster that has just happened, and this is partly why we said the Bitcoin price tanking, and that's a whole other story. This is super complicated, but this is just the top story going on right now, is what's happening with Luna. So I'll move up to the Bitcoin chart, and every single one of these lines represents a day. You can currently see that today we're sitting in a little bit of a red day, and our cycle top or our all-time high is right here. This is our $69,000 US all-time high, and if you look at our retracement from that level, right now we're currently sitting about 54% down, 55% down over the course of 185 days. So this looks terrible. This is something that you're going to read on the news. People are going to be talking about that on the news and how terrible this is. And Bitcoin's lost 50%. But what they don't tell you on the news is that if you just scroll out a little bit, this dip right here, this is when COVID hit. So at this exact moment, Bitcoin is roughly between $3,000 to $5,000. So let's take a little look at that. We go from, let's say, a $4,400 to the top. You would have made 1,400% or $64,000 per coin. And even right now, at today's price, you're still up 600% or $26,000 for each coin you bought. So the narrative is basically how you look at things and when you're looking at things and how much time you are in the market. I like to show people some of the different tools to see where we're sitting, and moving averages is some of the ones that people like to focus on. So I can add that in here, and you can see the green color is our 9-week moving average, and the orange color is our 21-week moving average. The 9-1 basically correlates because it's just calculating the price. So we're a little bit below. So we're actually in a dip. Now, I don't really go by moving averages a lot. One of my favorite tools to look at is this one here, the moving average convergence. And that just gives you a basically red or green scenario of, are we in a green day or a red day? Are these chasing over top of each other, or are they dropping below? And you can see in this time frame that we've been dipping, we're all in this low part. So this is what I used to like to use. But I think the absolute best tool to be able to know where you are in the market is using the Fibonacci retracement levels. And using those levels, what we do is we take last year's cycle high. I'm going to go on a different time frame just so we can see it better. So this was the last time we had a bull run, and Bitcoin ran from $1,000 or $400 all the way up to $20,000, and then it dropped back off. Now, if we take from that cycle top and drop a mark, and we go to the COVID crash that I was talking about right here, and we make that our low, but we just drag the time frame over so we can see it compared to today. And we set that in. So here you can see this is the top from last cycle. This is the bottom from this cycle. We drop this overlay in, and all these colors give you a range of where we're sitting, or basically different levels based on some mathematical principles and psychology of investors of where we're going to sit. One of the levels that we always like to hit on is this 4236. This is what I like to call the top. When we see something hit up here, so when we set it back here, this is March 2020, and this is January of 2018. So in March of 2020, you could have overlaid this tool and known that whenever you get to this top, this anywhere in this band, you've probably reached the top of the cycle, and then it's going to retrace down to the middle, this 161. This is a big Fibonacci level, so it will retrace to this level before it crashes all the way down to this 263, this bottom level down here, and it likes to play around in the 618. So these are kind of our focal points. And if you notice, the last time during a market, it played around in between the 618 and the 236 for the whole time. It dropped below it, and that was our big spike. This is what scared everyone because it actually went below there. And then when it finally came through, it ripped right through these. It didn't have any moments where it showed support and built up structure, and it just tore right up to this top. And when it was rejected at this top, it came back down. Let me just erase the drawings a little bit. So it came back down. Oh man, I lost my drawings. That's okay. They came right back. It came down to this line, this 161. I'm going to draw these all in again because I can mess this chart up really fast. It spiked after it crashed to this level, and now it's retracing back to it. So basically, because there's no structure under here to bring us up to this level and stay there, we could probably count on this crashing back down and hitting either this level, which is about a 14,000, or down to this level of 7,000. So this is pretty much what I would call the expected crash of the next bear cycle. And that would all be based on this top and this low would get us this peak, which you can see it actually happened, and probably the next time that there's going to be a low. So just to show you what we could predict in the future, or be able to judge in the future what might happen, is let's pretend that this does become our low. So we're going to just set an X right around here, just so we can set our next one of these charts. So I'm going to delete this one. So this time, this cycle's top will be here, and this cycle's bottom will be here, and I'll put in another one of those lines. And this time when we put the lines in, the top price of Bitcoin looks like during the next cycle to hit these 423 fib numbers, you're looking at this line that's around a $240,000 Bitcoin. Okay, so basically what you can expect to happen is it comes crashing down to these levels, it plays around in here, it shoots up to here, and then it's going to go up here and do one of these, retracing back into these and doing this action before it crashes down again and does the whole cycle. But the next time it does its cycle down, it might only go to 60,000. And that's kind of what we see the top of the last one. So it's like a sleep repeat cycle that just never stops happening. That once you see how much it's played out before in the past, and once you see the history of it, like I'm just going to take you, sorry, let me delete that. I'm just going to take you on a quick history of Bitcoin. If we go back and back and back. So this is 2011. People are buying Bitcoin right over here for less than a dollar. It rises up to over $32, and people are heroes. This is amazing. Like, you know, you multiplied your money 60 times, but then it crashes down, and you're around $3, which is still better than 50 cents. But this is where people are laughing at you and, oh, you were in a scheme. But the second you hold on for a little while and you watch what happens next, the next big pump went from this $30 to $250. And yeah, of course, the next thing that happened is it crashed back down to 80. And it does this again. But that's one of these, you know, drop the cycle, pull it on, and check out where it goes. And it actually landed on a full candle here. So you can use these tools to kind of find out the information. So just watching the history, we were up to $200, it crashed down to 80, $60. We watch where it goes next, and it's $1,200. So, you know, you feel like a winner here, you feel like a loser here, you feel like a superhero here. So now it's $1,200. You think, oh, it could crash back down, and it did. It came as low as about 200, and the next thing it did was run up to $20,000, and that would be our last cycle top. And of course, it came down from 20,000. We saw it hit 3,000 here, and during the COVID crash, it was much lower. And then, of course, it went back up to almost $70,000. So that's why I'm saying, even though right now we're seeing one of these drop downs, and I expect it to go lower, that the next time it does go up, we see that next step up, and especially using those tools. So for me, it's like not trying to time the market and be, can I get in here and get out there? It's, can I last from here to here? So you don't want to put in the money that you need. You want to put in some money that it doesn't matter what happens to it generally. Like, I'm not going to look at this for a couple of years. And if you can wait the time out, you'll see these tremendous gains. Like, let's just go, this is 2022. Let's go a 7-year little stint. In 7 years, Bitcoin went as high as 20,000%. And we're currently sitting at 10,000%. So it's not timing the market, it's time in the market. And as you can see, this is the game that we're playing. And that's exactly what I'm doing here. It's just accumulating, especially when prices go lower, and waiting for the next big pop. So, anybody that has any questions, get a hold of me. I am the Coin Guy, coinguy.bitcoin. This was the 16th day of May, 2022. You can find me on YouTube, on Patreon, and on my website, coinguy.bitcoin, on Web 3.0. I will have the link in the description if you're still on traditional internet. If you don't know what any of that means, you need to get hold of me to find out what all of these are, and we'll be able to help you all navigate the coming matrix of the financial system. Thanks a lot, everybody. Have a good day. Hope you made it this far, Nanny.